Hello guys, I'm trying to prepare to get online as we wait for a few guys to join. I'm also online on YouTube. Yeah. Hello guys, I'm trying to prepare. Okay. So they will be quick. Final setup. Okay. Online. Here we are. Okay, we'll not wait any further. So for those who are ready, I don't like to waste time. So just start. I have to put up my camera to allow faster, faster streaming. The phone on silent. Okay. Now we have so many opportunities. So I don't want to miss the opportunity that we have in hand. So straightforward, straight away to the point. Whoever is ready to learn can learn something. I don't like to wait for people. Let me see. I have to mute everybody. Okay. So kindly do not unmute yourself, so we can have a swift presentation. I think there is nothing remaining now. It's just to start our presentation. Anyway, today I promised I'll talk about Fibonacci and also market correlation as we trade live. That's the reason actually I've started a little bit early before time has trade kick on. So straight to the core points. First, there is something we call correlation. Correlation in market is whereby you look at pairs relative to the other. Okay, say for example, Euro, USD, and maybe GU. You can do a correlation between the two pairs for you to understand how they move. Like, does this move faster or slower than the other, or so? So this correlation helps you actually to reduce the screen time and also the time for the time that you use on your the time you use on your analysis. It will also help you to to open orders very fast in terms of you don't need to analyze A, B, C, D to Z. You can analyze A or B and be able to make to open orders as per the correlation. So whenever there is the correlation, you always get a good entry for a certain pair. You can use another pair at the same time to enter. If, for example, I love GU and I see GU is correlated with Euro USD, I will not trade the GU Euro USD. I'll do the GU. So through correlation, you can also be able to minimize risk because utakuwa avoid pairs that are likely correlated. So actually, correlation, I fit it in the fourth method of analysis, whereby I'll use a correlation to analyze. We said in the previous previous lesson or previous live trading, we said you can do manual trading, you can do auto trading, you can do also which others? Manual, auto, the types of analysis. Sorry, you can do the technical analysis, you can do the sentimental analysis, you can do fundamental analysis. So this is for me, not for everyone. I can say correlation is also a type of analysis, you know, because in this case, you are not doing any fundamental relation, you are not doing any technical relation, you are only doing, and you're also not doing sentimental analysis, you're only doing the correlation analysis. So correlation can be a very good way of analyzing the market. So what do we mean by correlation? It's just a symbol, a mutual relationship, you know, or connection between two or three pairs or two or three things. So when you have 2 or 3 things that seem to be connected together in a way, hiyo ndo tunaitanga correlation. So correlation is just that simple connection between 2 mutual things, between 2 or 3 things. Okay, so that's very important. You understand the meaning of that correlation. So in our correlation, we normally look at one pair and another. So there comes a time whereby one pair and the other, which are positively correlated or negatively correlated, they move. If they are positively correlated, they should be moving in the same direction. But it comes a point whereby they can move in different directions, you know. So they create something we call coefficient of correlation. This difference between the gap between the movement, as it increases, it creates something like a coefficient. So that coefficient is your difference, though in to allow to do the market is being manipulated. Actually, that's the only way you can know if the market is being manipulated or not. You see, whenever you see that difference, unajuanga easily the market is manipulated. So in correlation, we have 2 types of correlation. We have it can be either positive correlation or negative correlation. So when we go to correlation, I love to use my share whiteboard. I have to use my whiteboard. Here we are. Okay. I have to use my whiteboard. So when you come to correlation, it's like a relationship between 2 pairs. I think it's important we add mutual relationship. Yeah, mutual relationship between 2 pairs. So when we are in this correlation, we've said there are 2 types of correlation. 2 types. We have positive correlation, positive. Alafu, the second was negative correlation, negative. Right? So since we have the 2 types of correlation, positive, negative, you will know. So positive, pairs tend to move in the same direction. Pairs tend to move in the same direction. So in a negative, they create something like this one is more of a parallel. This is more of a parallel. The positive one is more of a parallel. Parallel. This one, it's more of a parallel movement. Double arrow, parallel. Whichever way, no, should be parallel. Okay, parallel. How do you write parallel? Oh my God, I'm forgetting my English. Okay, they are kind of parallel pairs. I think unaweza parallel should have single R and double single R and double L. Yes. So my whiteboard parallel. Yeah, that way. So you find there most of them they are parallel. That is, they will never meet in terms of not they will never meet, but in terms of they move in a direction whereby it seems like there is a difference. The difference is almost somehow constant. There is somebody saying something. Oh yeah. Thank you. Mine are parallel. Sometimes English you put it. So we said the pairs tend to move in the same direction, and then the negative one, they they create diversion. They create okay, this one we can say they converge, somehow converge, but now the second one, negative, they create something like they diverge. They create difference in terms of diverging. Yeah, so they create a difference in terms of diverging. Like one goes up, the other one goes up, down, I mean. One goes up, the other down. Okay, so this one, they move in the same direction. The other one goes up, the other one goes down. So whenever we have a negative correlation in a pair, they always move in different direction. So with this kind of knowledge, it is so easy for you to know exactly if the pair you are trading is positively correlated or negatively correlated. So once you know that, you can easily manage your account. So what's the importance of having to know this? Importance of having to know this. One, you reduce risk. Minimize. Let's use minimize risk. It's easy to minimize risk when you know correlation. Second one, reduces screen time. The time that you use to analyzing 10 pairs, when you analyze just one that is correlated, you have analyzed for all. So you reduce the screen time, and also it's time consuming. Time consuming. So time. You can minimize time. Minimize time used in analysis. So reducing screen time and time used in analysis can be all the same, but it depends what you are doing with the screen. So for me, when I do correlation, it's easy to understand this. Why am I telling these guys? Why am I telling you about this? This stuff I'm mainly used by institutional traders. Institutional traders, these are guys who are very, very rich. Let's say these are guys who don't have time for time to spend all hours in the screen. These are guys who will trade. Mtu atatoka tu out yake Miami or Florida, anakuja nakaa chini kwa screen. He doesn't have all time in this world to check what is happening. So he just goes to the market. He has a blue bank software. He just checks the demand and supply in the market. Once he sees the demand and supply, anaona, okay, most of our retail traders are selling. So because most of retail traders are selling, he comes back to the market, he looks, why are they selling? And you will see these traders have been trapped. So what they will do, they now end up for a buy and go against you. This person has spent less than 2 hours to maneuver through the screens, and at the end of it, they are making a kill. But what are we doing as retail traders? We are losing. You understand? So one way of knowing correlation, this person will analyze 2 pairs. Wewe utabaki hapo ukianalyze Euro USD, CHF, Euro CHF, AUD New Zealand. I even wonder the people who analyze all those things, how they manage. It is hectic unless you devote your own time, all your time for analysis. So one of the pairs you should consider to analyze for you to get correlation, pairs like USD, pairs that you can consider for this purpose. GU, let me just write in full, the Great Britain pound. Then we have a euro, we have Japanese yen, JPY. You have Japanese yen. Yes, they are usually 5. The 5th one is the main one that you can use. The main one that you can use for correlation. Yeah, gold. I forgot. Yeah, gold. So when you know the correlation between these, you see all these. Oh, and there is a DXY. Sorry, DXY. When you know the correlation between all these, the 6 of them, USD, GBP, Euro, JPY, gold, and DXY, you have done the whole of the market. Okay, now I want to classify these pairs in terms of correlation. Kuna mtu anajiuliza kwa mind yake, where is Australian dollar? Where is New Zealand dollar? Do you mean they are not correlated? I want to show you something that will help you to understand. So in a correlation, we have something we call commodities. commodities linked,
Okay.
commodities linked pairs. So in commodity linked pairs, you normally look at the pairs that normally get affected by the commodity. And one pair that gets affected by the commodity is, e.g., CAD, Canadian dollar. What do you mean by CAD, commodity linked pair? Like Canadian dollar, it's affected by oil. This one is affected by oil. Oil. Hey, see, people miss this. You can't pattern to analyze the way I do it. But anyway, it's all right. So CAD, we have CAD. CAD is the Canadian dollar. It's affected by oil. The reason why it's affected by oil is because 80% of imports, 80% of oil imports from the from United States, from US, comes from Canada. Okay, 80% of all oil consumed in US comes from Canada. So, being from Canada, they require to buy the oil in Canadian dollar. So they'll have to change their dollars to Canadian dollar, to Canadian dollar. They have to change US dollar to Canadian dollar. Already they are doing Forex. So in the process, if the oil demand is high, Canadian dollar also goes high. Because the demand, if it's high, the US is gonna import a lot of oil from the Canada, which means the Canadian dollar will go high. So most of commodities tend to behave the same. If the growth of oil is increasing, you also find other commodities like wheat, like wheat, or oil products, in short, that is a crude, Brent, or the, WTI, all of them. You find they work almost the same. So you'll also find when the commodity itself, the price of commodities are tending to go high, you also find Canadian dollar also gaining. So you don't need to analyze oil. You don't need to analyze Canadian dollar. You can analyze either. For me, I just go to oil. Nikiangalia oil, nikiona inabuy, hata without thinking, I just straight short my Canadian dollar, short my USD card. Shorting USD card means buying card, selling USD. So that's one way. Whenever we have news like today, we have oil inventories. I will not trade card until the oil inventories are out. If there is a demand, in barrel of oil in US, that will give a very big push in Canadian. And check your chart. Every Wednesday, there is a massive movement in Canadian dollar because of the oil inventories news. So that one you have to know. The other one is Audi. Audi stroke New Zealand dollar. Audi stroke New Zealand dollar, there is nothing interested in Australia. There is nothing interested in New Zealand dollar. There is nothing completely in economical factors interesting in those countries. But these countries, we know, they supply a lot of raw products, to not US, to Europe and also to China. So whenever there is movement, high movement in let me separate this one. It looks like one pair. Let me put it that. Yeah. So whenever there is demand, maybe in gold, when the gold is going up, you'll come and realize Audi and New Zealand dollar are also going up. Why? They are all commodity linked, and we know gold is commodity also. Remember, so whenever Audi and New Zealand dollar are going up, you come and realize they are linked up. So when you are doing technical analysis, before you even start drawing those charts, that's why I normally tell these guys who teach, before you teach people on how to draw the charts, first teach them why is this pair. Don't come and tell me with a chart, New Zealand dollar USD is going up, and you're not telling me, you're not scanning the markets. You see, you understand what is happening in the commodity market. What if there is a crash in commodity market, and you have told me to buy Audi? The Audi will crash also because it is commodity linked. These are things that you cannot, they are just clear as it is. Hakuna mambo mingi. These are the things that move currencies. These are the things that move Forex. Forex is moved by these things, these correlations, blah, blah, with Kamayo. So that one I've said. So on the USD, GBP, Euro, JPY, Gold, DXY, it is very clear. So let's come to gold. It is very clear. Why do most people lose in gold, or most people fail in gold? The reason why most people fail in gold, it's not because they fail in their technical analysis, not because they fail in their sentimental analysis, But most reason why most people fail in gold, it is because they don't understand gold is completely linked to fundamentals. Gold and fundamentals are two things. So gold and JPY, Billy, we normally call them, someone is trying to hang. CJ, are you hanging yourself? Don't want to lose a member in a live presentation. CJ.
Yes, yes, yes.
Hanging yourself.
Okay, I'm on. I'm okay now.
No, I'm saying you're not hanging yourself. As in ujieki kamba kwa shingo.
Oh, I'm putting the charger on.
Oh, okay, okay, so So, okay, now you can mute yourself. So we have gold and JPY, Japanian. So gold and Japanian, we call them safe haven. We call them safe haven pairs. What do we mean by safe haven pairs? Safe haven pairs. These are pairs whereby people will run to whenever the market is not behaving well. So you come and realize, for example, the USD, it's choppy or it's not trading, or there is something in US that is not well and good. That's the time you come and realize most people will run to gold. For example, when there is bad news, for example, in US, when there is bad news. When there is bad news in US, people will come and buy gold, because that's why you see whenever there is a bad economic output from US, gold always shoots up more and more. Reason being, it is a negative correlated to USD. It is completely negative correlated to USD, because a gold being a commodity has to be bought, most is bought in US dollar. It's weighed in US dollar. So the moment US dollar crashes, gold also moves up. In fact, it's the best place to go. So how do you manage how do you reduce your risk in such a case? When you have your USD pair open, do not trade gold. It is just simple and clear. When you have an order that has USD, do not trade gold at the same time, because you are doing a risk. You are increasing a risk. Okay? And there is nothing like wacha ni jaribu. If you jaribu, it never ends well. So that's one way. Also, Japanian, it is also considered as a safe haven. Reason being, in Japan, they try to make the yen as weak as possible, because we know Japan is a net exporter. You see, so if it's a net exporter, their currency being weak, it is important for the yen. Okay, so that is on correlation. So another tumemaliza the safe haven tushamaliza. So the other correlations is usually in the European market, and the European market is where we get euro. We get euro. We also get GBP, Great Britain pound. So I'm insisting on the two. First of all, they are all in Euro group, except now GBP Ligitoa after the Brexit. But still, in currency, we still consider them in Eurozone, because GBP is still in the process of fully getting out of the Eurozone. So whenever there is a movement in Euro, that movement affects also GBP, because they are all trading the same zone. You see, so that one reduces a possibility whereby one item is cheaper in France, and when you cross border in Switzerland, or no, not Switzerland, when you cross border in Italy, you find that commodity is selling on a different price. So that will create a certain market equilibrium, which will be an issue for a growth of one country. And this country being as a group like East Africa, being as a whole region, they have to maintain these pairs in the same equilibrium, in the same balance. So when euro is going up, GBP is going up also. So this we call all positive correlation. So when we come to negative correlation, we said that the pairs trade to create a difference or a divergence between them. They divide the pair. One goes this one, the other one goes the different direction. So these are pairs like USD. Whenever USD is going up, always expect Euro to go up. Why is Euro and USD going in different directions? First of all, we consider these two economies as enemies. You know, Europe and USD, the two pairs, we consider them as enemies. Let me not use the economy, but use the pairs. We consider them as enemies. So one must fall, the other one must rise. It is just that simple and clear. So there is not much explanation. There is no big business happening between US and European. The point is the two pairs are two enemies. One has to go up, the other one has to go down. So if Euro goes down, that also means the so so that one I think we are done. We are done with that one. So when you come again to another negative correlation, you will always find another negative correlation. It's usually between the gold, you may explain, gold and USD. We always know it's a negative correlation, simple and clear. When gold goes up, the other one goes down. So question is, what happens if at some point you wake up in the morning and you find these pairs are moving in the same direction? If the pairs are moving in the same direction, they create a coefficient between them. So once they create these coefficients, it's just a factor, a coefficient, just a difference. Once they create this difference between them, when they create this difference between them, you can take advantage of trading that difference. So whenever you see these pairs are not supposed to move in the same direction, this is what we call manipulation. This is what we call manipulations. So this is what we call manipulations. And this majorly happens in London sessions. That's why I don't trade London session. Actually, majority of the time, like London session, I better sleep na ni overnight, ni transnight, nikifanya vitu zangu, na ni sleep during the whole of morning, just to avoid the London session. Because these coefficients happening, these coefficients happening, ndio inaletanga hiyo manipulation, na sana sana huwa ina happen during London session. That's why we normally have London breaks, you know, these are manipulations, by the way. And most of people who trade London breaks, I can tell you for sure, they cannot handle New York session. They cannot handle New York session. In fact, if you find somebody who can handle New York session successfully, that's person who has monitored this market. Otherwise, London session, it's just like manipulation. You know who manipulation favors who? Manipulation favors the retail traders. Whenever there is a manipulation, they favor retail traders. Okay, but during London, New York session, now this session, manipulation is almost zero. So it is unlikely to favor the retailers. So you find the people who are mostly successful during these sessions are not retail traders, most of them. These are now the institutional guys, because what they are doing, they are basing their analysis on the previous market movement during the previous session. What I'm talking about is day trading only. I'm not talking of swing trading. Swing trading is a different case, but in most cases, in a study that's been done, a lot of people, like almost 85% trade day trading. They are day traders. So the remaining is just swing traders. So we better be where there is a majority of traders. So this is what we call manipulation. So one of them into a London break. So during New York session, there is now the during New York session, that's now when we get the market comes back to normal behavior. So we can say it we can say, how do we call it? I'm trying to think a good name I can use it. New York session. Yeah, I got it. During New York session, there is during New York session, we have, let me just put like this one. Market structures are completed. So most market structures are completed during New York session. So why am I always concerned in New York session? The reason why I'm concerned in New York session is because market structure, it will be completed. Mimi saizi nikiingia pale Facebook, for example, I like Facebook anyway. It creates a base for argument. It creates a base for breaking monotonies. You know, you can create a joke there, mnacheka, mnakosana. That's what makes the day move on. So what completes why do I not argue with people when it comes to New York session? Because I know clearly wewe ukisema ati market inaenda chini na mimi niseme inaenda juu, no one can decide, only market can decide. But why am I always so clear like this has to go this, and in most cases it goes that way? It's because the structure that we had during New York session, London session, has been manipulated, has been shown a breaks in that structure, which will be always a forced break. So when we come to New York session, the structure now will return back to normal and complete. Now that's the time you can enter a clean buy or a clean sell. For example, right now, I have one order in pipeline, which is Euro JPY. Euro JPY. You will come and realize right now as you speak, I need to enter a sell. Is it time? Yeah, it is time to enter a sell actually, because the structure in that pair, according to me, it's already almost been completed. So I can wait further kidogo to be completed, you enter a sell. Okay, so during London session, it went all the way mpaka, what was the price in the morning? 132, I think it went to 132, 132.035. Okay, that was what was the law of the day, the law. I want to show you how these breakouts and manipulation works. So when you come at the open, I think the open was around 132.200, 132.200. So I got up to delete this. I show you. I got up to delete this. So current price is 132.450. Okay, so if we were to draw, if we were to go to the chart and represent this in a chart, this is what we'll get. Let me draw it. Okay, this is what we'll get. One line up, another line up, another line up. Okay, so tukidraw hivyo, hii tunaweza sema ni the open hiyo ndio open, hii ni low.
Hello. Hello.
Yes.
Share your white screen, we can't see it.
You can see my screen?
Your white screen, yes. I can see the other one with a screen hapa chini na TV inakaa na laptops.
No, hiyo unaona screen na laptop ni mimi nime switch off camera.
Oh, kwa nini hatuoni ile screen vizuri ya white? We can't see what you are writing.
Anyone else who is getting the same problem?
Tunaona.
Iko clear?
Iko clear.
Maybe she wants to see the chart.
Click on the white screen.
Yeah, maybe she wants to see the chart.
Okay. So I think you are the one who has not done the correct name. So guys, mute yourself and we continue.
Hata mimi niko clear.
Haya, mwenye hapo naona anaweza nisichanganye. Unajua these things I don't read them. I don't read from where anatumia whatever is in my head. So sometimes it's easy to forget what I was doing. So like now, what we go happy. London break during New York market are completed. Euro GP. Oh yeah. Anyway, we are just taking the example for Euro JPY. So we've said this I need to use the right Bible. So this is the open. This is the open. This is the low. We put it low, L, and this is the current. So you can put them the way they are. So during London, if you see during London, at the open, market broke to the down. Okay, ikaenda ikatengeneza low of the day. So one characteristic of London session, low of the day or high of the day, or the word is or, not all. Low of the day or high of the day, it's mainly created during London session. If you have seen this the low, just know that's a clean market, a clean structure. So the low of the day and the high of the day is created during London session. Okay, so this scenario we are seeing here in London session. This it's a London session. It's a London session. So once market hit low of the day, it went up. Okay, ikafika now ile 32,200, which is the open. So it can create another break to the up. Now this break to the up, retailers sisi sasa wote tumekuwa convinced the market has already done the break. That's why it's called a London break. The market has already done a break. So as retailers, we are 100% convinced Euro USD is going up. And yes, it will go up to play along with your head. So at that point, you'll keep on adding. You keep on adding orders. Okay? Adding orders. You keep on adding orders at this point where it is currently. Because it has done that. But when we will go to the chart, analyze it. When we go to the chart, you will come and realize this chart needs to reach 132.4. Alafu we add another 200 pips. We add plus 20 pips the manipulation. So our entry should be between 132,400 and 132. Forgive me how I'm writing. 132.765 Apple. So our entry should be between that, because we normally have to add some 20 pips the manipulation ama za zile zinaitangwa force breaks. Okay, so once this is done, hapa hivi retailers waliingilia where the current market is. Hapo ndo watu wote wanakonvinziwa. That's why I normally go with the market with the confidence when I know how the structure of London works. It is just like a tick. Hii ndo maana ulikuwa unaona tunakuja tuna form ile M and W. So what will happen there? We'll have now the other leg down. You see? Maybe it will take 2 or 3 days, you reach another low, ndo sasa tuanze kwenda up. So you can use these on a Wednesday to predict long-term entry for a market. Okay, so what you see here, it's this leg ndo hii, this one, let me label it 1 ndo hiyo. This is 1, okay, and this is 2. This is 2, this is 2. 3 will appear down. This is 3. This market will go down and break the low of the previous day, na iende chini, ndo ikuje tena sasa form E3. Once you understand that, you don't even need these funny things to complete. Now, the other thing you can put in that, it is just oh my God, got a call. Hello, just a minute, I'm in a presentation. All right. So sorry guys, how did I not put on silent? Okay, so I was explaining this. So once you know this, the next thing that you need is a Fibonacci. When you apply Fibonacci in this thing, you just get exactly the same thing. That's why nilikuwa nasema I'll do correlation and Fibonacci. We are through with correlation. Whoever came late, too bad. But I think correlation, hakuna kitu nimeachia. So before we go to the chart and whatever we have done here to apply in reality, I need a question or a concern or somebody who has an issue. You can unmute yourself and then ask. I'll reply. Kuna question? You can as well andika kwa chat hapo. Unmute yourself, uulize kama uko na question. We give it 1 minute. If there is no one, we go to the charts. Sunny 3. Naona uko chonjo. Any question? Eh? Aya, seems no question.
Oh, sorry.
Yes, ask.
Naona hapo kwa number 1 kwa hiyo graph kuna number 1, number 2, number 3, tena number 3 kwa hiyo arrow inaenda juu. Mahali umeandika fib, hiyo arrow imepoint mahali umeandika fib.
Mali nimeandika fib. Let me check. Let me just
hiyo
check.
3 ziko mara ngapi hapo?
Na tuna kuna orders tuna miss mali. Gold is a clean buy right now. But we have to check. I have to answer you. No hurry. You can always trade another day. So acha niangalie hiyo whiteboard yangu ina lost kidogo. My whiteboard ina lost. Oh yeah. Here. Oh 4. Sorry. Yeah. Thank you for the correction. It should be 4. Ni 4.
Okay.
Ni 4. Sorry, ndo nimeona ni 4. Aya, unaona hakuna ni watu wako wanafuata ama mimi ndo nimeharakisha. Yeah, it should be. Yeah, thank you man. Thank you very much. At least naona kuna mtu ako kini. This is 1. This is 2. This is 3 and this is 4. Yes, that's very true, man. So in a form something like this. These are W. We call it a W structure. Unaona? So if you draw the trend line, unakuta inaenda somehow like this. Unaona? It is a bearish. Hizi ndo zinaitangwa low of the low. You understand? Okay. So someone is asking me to allow for record. Yeah. Unfortunately, I don't record anything I do. That was been my biggest weakness. I don't record anything I do. So yeah, I don't completely. Yeah. So inakuja ingine ikikuja tunaendelea tu na live. So I think we have to go to the chat. We will miss very important entries. I don't want to show my balance. The other time we show my balance, I had an issue with some people whereby watu wanaanza kuninbox sijui $10 ya kutrade nini, hapana. But
Albert,
it's alive.
naweza uliza swali.
Uliza.
Kulingana na analysis yako, we are supposed to, like for example, in that scenario, we are supposed to take that seller from up there, 130 something, then we come down. My question is, market ikifika around 7-8, I usually see it slowing down.
Okay.
So this sell we are taking, any trade that you are taking at New York Open, New York session, haitatupata wakati market inaanza consolidate.
Yes, that's a very nice question.
Am I supposed to close those orders ndio nisipatikane tena na change of day na London?
Yes. Now I think that question I really wanted somebody to ask because I forgot to explain how these things works. I think thank you very much for that question. In fact, this question will open eyes for many people because mtu anauliza, now I've ended at this time. Okay, what will happen during Asian session, Asian consolidation? What will happen the following day in the market? So if the market decides to go the other way, what will happen during that London session? You see, this order to me open saa easy, and we are doing intraday. If you are doing intraday, you don't consider like at midnight sequencia, you consider the number of hours. That's why I said you classify yourself as per the number of hours and which trader you are. If you are holding an order for you are holding an order for 24 hours, then you become an intraday trader. You are holding an order for less than 4 hours, you become a scalper. You are holding an order for more than 24 hours, you are becoming a long-term trader. So I'm not saying that you order a day within a day. So to answer your question, I go back to the whiteboard na nikuoneshe. Yeah. So let's go to the whiteboard. Where can I get the whiteboard? This whiteboard na disappear. It's trying to disappear. Yeah. Here I have it. Here I have it. I like to draw my things down. Ndio tukienda kwa chart, it will be easy. Sometimes charts zinakufanya ukwe a little bit you know, na anxiety. So these are our MT4. We divide into sessions. We say this is Asian. We say this is London, and this is a New York session. Okay. So when we took our order during upper New York session, so let's start now trading from here. Let's say Niapo X. We took our order at that point, and the market trend. The first thing you have to check in is trend. The trend is on a reversal or is on a buy. Trend can be either on a reversal, on a consolidation, on a breakout. Okay, so let's assume in our trend here equal on uptrend. Yeah, can be up or down. Reversal trend can be a consolidation trend where there is no movement. Let's say it's a buy. It's a buy trend. So when you take at this point, market itaanza tuseme tu ifuate to your trend. Okay. Now we come to another fresh day hapa, which is the Asian session hapa. Sijui kama unafuatilia mwenye ameuliza. Unafuatilia?
I'm on kabisa.
Okay. Now after that we come again to London, ndio uone venye kunaendanga. So during Asia, the markets imeenda hivi. During Asia, the consolidation will be there. Okay. That will be the Asian consolidation, assuming it's just like that. Then during London session, I want you to get straight from here. Actually, I will use a red biro. During London session, this market, I said London session, it is 80% the most manipulated session. During this session, we will come and draw two lines hapa. Moja hapo, moja hapo. Hizo line mbili zina represent Asian consolidation, all right? Hapa New York trend. This was a trending market. This was trending market. This is a New York. So tunafika hapa, tuna create consolidation. Your market na consolidate. So we are waiting for a breakup. For a breakup, according to analysis, we should wait for a breakup. Unanielewa?
Yes.
Because our trend, it's a general uptrend. Okay, I want to show you where you or us retail traders, we go completely wrong and where we lose our money. So this market, it a break during London session, it will break, not it a break. It will break this way, downward. So during London session, our market will break downward. So what will make you confirm whether it is true break? Remember our entry to leg at upper X. So your stop loss should be, so this market equal somewhere upper. Okay. So our stop loss should be always down somewhere upper. Our stop loss tuweke tu hapo, for example. Assuming during this movement, our TP, which is around here, TP, let's put it TP, haijakuwa hit during this movement. Okay. Let me use a different pen, the blue one. So during London session, nimesema hii kitu itaenda chini hivi. There is likely he hits the previous day low. This low. Okay. Now in this case, we will not use this low where we ended. We call it low. This is kumbuka. It is New York session low, not day low. Now that's where you'll go to your chart. Uangalie siku ilikuwa wapi na siku ilikuwa somewhere hapa. Siku ilianzia hapa. At this point in midnight, hapo. Your siku imeanzia. So, previous day low, it is here where the market is. Okay. I think nimechora vibaya kitu, but I can try to erase it. Okay. So, when there is this lantern, there is this lantern here kwenda chini. Itaenda chini hivi. It's previous day low. This is low, previous day low. So you watch if this previous day low, it is broken. If this day is broken, upper. If it's broken, or okay, ni jina yangu naita manipulation, but we call it London break. It is the London break. So what will happen during New York? Hii chart itakaa dati. So what will happen during New York? Tuko na hizi line mbili hivi na market ika break downwards hivi, ika hit previous day low, which is here low. So the retailers, sasa sisi, we are already convinced it is a sell market, is a sell. Okay, this one ikiwa hivi, kila mtu atakuwa anatafuta a way to sell. But kumbuka your entry was here, so you're already running on a profit. But you are waiting for your stop loss to hit huku chini. So you are already saved. Okay, hii manipulation ya London haitaku affect. I'm explaining why entering an order at New York session, you can hold it even to a longer term. So after here, after the low of the day, during London session, we said London session makes low of the day or high of the day is it during London session. Hii market itaanza sasa kufika New York session hapa, New York. Okay, so ikifika New York session, siseme hapa ndio New York hapa. Angalieni side ingine, itaanza kurudi tena hivi. Iki hit where the London opened, itateremka tena, iretest low, itateremka tena, iretest the low of London, or just likely iretest the low, ndio iform a structure. That's when you say during New York is a completion of structures. Then this structure will now move up, and this structure ndio hii hapa, ita move hivi, irudi tena chini kidogo, alafu ndio hiyo iendelee na our movement upward till you hit your take profit. And this maybe it when we come now to the next consolidation, which now takes another Asian session hapa. So in reality, we are getting a market that is trending upward. So a market does not trade upward like at hivi. Hapana, it has to convince people. Otherwise, ingekuwa ina trade hivyo, everybody could be making money. It has to convince people we are reversing. You understand? That's why setting small stop losses, you'll be giving money to your broker. Understand this, because I've gone through the same. I've 10 years experience in this. So when you do small stop losses, you'll be giving money to your broker. I can tell you. That's why my stop loss are never below 100 pips. I've never been below 100 pips. Better nieke small lot size na nikuwe too comfortable. Yeah. Okay. Now, unless nile account niko ready to crash, I got no issue with it. So now we are done. I think I've explained that clearly.
Very well explained. Nimeelewa.
Okay.
Thank you.
Okay. I was getting some water. So we go to the chart. Yeah, I need to share this. So here we are. So my gold. Gold yangu nimemiss. Ni mimi tu nimepoteza sound. Ian, check your sound. Because me, I know everybody can hear me. So my chart, I think iko on saizi. Yeah, iko on. So yeah, my chart is on, I'm very sure. Okay. So I need we go to Euro USD iko wapi? Euro JPY. I normally don't trade cross pairs, but hii hapa, hii ni must because it has a clear structure. Okay, so there we are. I can close this. Okay, so we need to get this clear. So the trend, it's obviously unaweza iona, it's bullish. Hata hakuna haja draw anything. Obviously it's bullish, but it came to a point whereby it turned. So for us to know whether the trend is being reversed and the trend is being hiyo inaisha, a bullish trend, it's about to end, that's when you use maybe a candlestick pattern to know that. But you can also use the concept of support and resistance. This is the time you'll use support and resistance concept to know whether the trend has completely died. But when you look at this, when we use the concept of support and resistance on this one, I will come and draw some few lines. I'll come and draw some few lines. Okay, just a minute. I'll come and draw one line here. I want to draw one line there. There is I'll show you why I'm drawing that line there. I'm drawing that line there. And I will come and draw another line here. Now, this is just the sign utajua kama tu market is about to reverse or so. Then I can draw another line here. There. Okay. So there are some 3 lines nime draw up. These lines, it's the one we use for concept of support and resistance. You don't need to do mathematical calculation to do a support and resistance maliko. But with this, you can know. You know, a support in where market will tend to eat and reverse upwards. And resistance is where it will tend to eat and reverse downwards several times. So when you look at our market here, you see we start from our extreme left. You see at this point, if you can follow, this market came up, hapo, ikafika hapo, ikahit, ikarudi. The same applied here. You know, don't hizo zingine ni force breaks. Ikakuja ikarudi tena ikakeneza nini? An name structure. Downward, hivyo. Ikaenda chini. Okay? So, these 2 points for me becomes resistances. Does the time frame matter during an analysis? You use 4 hours. How would you be in a 1 hour day? Okay, time frame, I mean, does it matter? Okay, for me, I have rules. When I'm doing intraday trading, I use mostly 4 hour, 1 hour. But I will confirm trend with a daily time frame. Kama uliona the first thing niliweka daily time frame, hata macho tu ilikuwa inaniambia the trend is upward. Then from there now we go to the lower time frames. So we also again formed another ni hapa juu, twingine twingi hapa by the way. So these are some of consolidation hapa. It forms a consolidation. Now these are consolidation. You know, market has 3 phases, so you have to understand, right? There is the phase number 1 is trend, that is trending. Then we come consolidation. The third phase is breakout. So the market here was clearly trending on upward. You could clearly know here. I want to see hata ile kile concept nilikuwa naonesha pale kwa London. It apply even kwa longer term. You see? So here the consolidation ends at this point. Here. So we expected market to go down or to go up. But in our case here, the market broke down at this point and went down. So this resistance, we call it R, E line to liter R. At the point of breakout, at the point of breakout, it completely turns to S, support. Where it breaks out, that becomes the first support. So when was the first support retested? The first support was retested at this time, upper, where the market just did. I think this was on Monday. Yeah, this was Monday. So our first support was retested on Monday. Okay, that's when our first support was retested. So we go to the second line. So at this point, hii market ilienda ikafika slightly karibu ifike kwa hiyo line, slightly ikafika kwa hiyo line, slightly hapo. So now this one also becomes our next resistance. So resistance also. So these are resistance line. Okay. So at this point, ikaenda juu ika break. So now immediately break, anything from on the right becomes support. So this line from here onward is a support line. Is a support line. Okay. We know the second line, mid line, it is a support line. Anything from here kwenda hivi ni support. Okay. So why do we say support? Hii market venye ilienda juu ikafika hapa, ili drop chini, ika retest the support. So ika hit support. Ikapanda tena juu, ikafika now to another resistance, just to up to ni hapa resistance. Ikateremka tena, acha niandike in capital R. ikateremka tena, haikuhit hiyo line, ikaenda hivi, ikakuja, ikahit another hiyo line tena, support. So the support was broken. You understand? So why I say I'm really ready to trade a sell on Euro JPY, it is the support was already broken. So from here, where it was broken, anything going this side for me is a resistance. So the market must resist at this point. Now already know you hit up and level. So what I'm expecting after resistance is to go down to hit the next support. Hapa kumbuka, I've not traded the concept of support and resistance. What I'm trying to do is just the psychology of the traders. Right now, the psychology of the traders is continuation of the overall trend. That's what unasikia watu wana-argue wanasema this thing is going up. Remember, every 80% ni retail traders, watasema hivyo. But I assure you, not assure you, but as per what I know, this market will flip at this point. Iteremke chini, ndo ikuje it retest this support again, ita form structure like this. Hivi, hivo, hivo. Ndio ikihit hii sasa, we are waiting for this third leg. This third leg, ndo ita push sasa market up. So this leg was to convince retailers, the third leg, the second leg hapa hivi, hii second leg hii hapa sasa ya Monday na jana, it was to convince retailers to continue buying. Okay. So right now the retailers are buying. Smart money are selling because they are selling where the market is creating more behavior, and the behavior is at this line, the middle line. That's how unaona hata hapa ilikuja ikahita haraka na ikateremka. But a retailer will be looking for it to come at 1.3394 ndio isell. I was arguing with someone else somewhere, na akaniambia lazima ifike hapa ndio isell heavy. That's exactly how a retail will see the market. But for me, I will not see it at that point. I'll see at a point whereby the second leg and third leg, they are always shorter. There is no way 2 and 3 can be equal to 1. Hiyo ni kitu moja unafaa uelewe. Manipulation happens here. Anything people may think will go up hapa ndo itoshane na hii. Hapa ndo watu wanakufianga, wanablowanga account. So I think I've analyzed that order. It is a long-term order. And with that said, let me just do a small sell on it right now. I'll do a small sell on it. I can do 0.05 sell there. I'll set targets later. So yeah, we have a question. Tuesday high or low of the week, mostly and during London session. I have just joined. I missed the first one. Will you kindly post the video thereafter? Oppo 10 Fin, I don't record my things. So completely they are gone. Does the time frame matter? Or you need the answer? Tuesday high or low of the week, mostly and during London session. I've not understood that question. Maybe you can come up again. So yes.
Yeah. Now, back to the question yenye tuliuliza mambo ya manipulation na kuwa trapped. In kwa hii chart yenye tuko sahi, where was our daily low? Because we said it has to be broken. It has to be broken. Then we form the third leg. Now we can buy. But for now, we are on the second leg. Tunaenda kutafuta that leg. That's why we are selling.
Okay.
If I'm getting it correctly. Now, where was our daily low in this?
Okay. In this case, you can easily know the daily low anyway. You can put the daily time frame, and just come and place your candle on top of it. Ukiangalia pale chini kama unatumia laptop utaona. Kama unatumia simu, it is the easiest actually. So our day low was here. Okay. So ukitaka kujua kutumia ile ni ya kwanza unaweka 15 minutes time frame. So this is our daily low. 15 minute time frame itakupresentia vizuri. This is our daily low. So nakumbuka daily low nilionyesha pale. This is our daily low. Hapa. So unaona actually the way it is. Unasi hata market consolidated during Asia. This is during Asia period. Kuna small gaps to fake. Actually, the small gap, hii gap unaona hapa, it is not a gap, it is spread. Spread were too high.
Oh,
That's
yeah.
why you saw something like gap. So this line imedraw. So unaona hiyo line imejora na daily time frame. Na bado ikakuja ikatokea on nani. Unaona? So this represent our daily low. Now you see what is happening in London. I want you to understand big by this. These things are golden rule in this market. Unaona, it has been manipulating upward. But now our essence, we said this manipulation for upward, we are waiting for a break. But now it has come hapa ikafika somewhere hapa, ndio hii inarudi tena up. We said it has to retest. Ndio tufanye nini? To drop. Yeah. Yani market is so easy, nothing to, yani I don't know why people keep on jungling to me. It is
you make it to be, you make it to look so easy by the way.
It is as in mi nakwambia hata nakanga chini na 20 minutes I've already analyzed every pair. Like nikiangalia tu na macho naona hii haina kitu, napita naenda kwingine. Okay. Please do gold again. That's where I missed. Okay, gold we said, I'm answering somebody. Gold we said, mostly we concentrate on the fundamentals and we were doing correlation. And we said gold is positively correlated, negatively correlated with USD. So currently my analysis on USD is a sell. So I have confidence of buying gold. Okay, but now I need to load the chart for gold. Chart your gold. I'm looking for gold chart. Gold chart. So okay. So because it is also in my pipeline of buy. Okay. So we can put 15 minutes time frame. No, I'm sorry, 1 hour time frame. Gold is in a very big consolidation. Ukiweka 1 hour time frame, it has been consolidating between this point 89 and 69 Apple, between 89 and 72. Okay, so gold it's been consolidating between this point. Okay, Apple. So we are waiting for a break up or a breakdown. But for me, I'm already in for a breakup. The reason why I'm in for a breakup, let me just show you. Now we come for trend. Ndo tujue which trend is gold, which is our gold trend. Ndo tusikuje tuweke vitu zetu. We put daily time frame. Clearly, when you look at the daily time frame, from here, actually, kwanza it's a very nice one to put Fibonacci. Nikiangalia hivi naweza ona tu Fibonacci. Let's put it that way. Ukiangalia clearly on a daily time frame, for you can see gold is a buy. Okay, you can see clearly gold is a buy. Well, it's a bullish trend. If you know from bullish trend, angalia from your screen, the bottom of the screen on the economy left, and the market is toward the top of the bottom on the screen. Even the market is going up. What I mean, easy. There is something like this. When you draw the diagonal line, Evo, from the bottom of your screen, upper, market is towards the other side of the diagonal. So this market is clearly on a bullish trend. So in this case, we can use a Fibonacci to know our next, if we are buying or selling. So I said I'll touch on Fibonacci. I wanted to touch on Fibonacci on gold. So we go to Fibonacci. I'm going to use Fibonacci retracement, okay? Because it's a retracement. So when you Fibonacci has a rules, you know, if it's a retracement, you go for the high of the knee, you place there to the low of the market, okay? No. So in such a case, sorry, in a draw near bearish. I'm forgetting. Gonna draw a bearish. So Fibonacci, yeah. You can, if it's a bullish market, you come the recent low to the recent high. Okay. Am I doing it correctly? Yeah, I'm doing it correctly. But hata Fibonacci, yeah, Fibonacci haina ni hapo. No. I should have, I think I did the mistake. I should have taken from the law of the low Fibonacci. Yeah, from here, the recent high to recent low was high of this exactly. That's what I wanted. That's what I wanted. You see, when you're doing a bullish market, you take the recent low, where the recent high, the recent high to the recent low. I'm confused na English. The recent high ni hii hapo. Kama unaona hapo nimedraw, you can put recent high to recent low. It's upper low. So when you are doing a bullish market, you draw from recent, you click on the recent low, recent high to the recent low, hapa nimeandika L, and then it will come the way it is. So after that, we know the key entries. One of the key entry is that 8.2. And you can see when this market came down easy, let me use a blue pen. You can see hii market ilikuja hivi up to ikahit hapa hii level hapa ikaform a W structure. Hizi structure, hii structure inakwanga important for institutional traders. Reason because it is a structure that represents human psychology in trading. The W and M structure, they represent the human psychology of trading. Okay, so okay. So once it hit that 8.38, which is a good entry, the market went up. Okay, so ikafika hapa, ika retrace backward. Now the retracement on this fib, the retracement on fib, I mean, came to 50% retracement. Okay, at 50% retracement, we're expecting it to go up to reach a point of extension. Now maybe iendelee up tena, it retest up. But now these are very long-term analysis. That's why I need to say maybe by end of the day, by end of the year, gold inaweza hit 200 if this structure is obeyed. Inaweza fika 2,000. Because I'm looking for a point whereby it will retest this high again. Because the market does not just reverse without a retest. Anyway, that's a very long-term analysis on gold. So on a short-term analysis, having that in our mind, we can always know it's just a buy. We can always know on a shorter time analysis. So for gold, mimi niko bullish from I think I shared from 17. I ended one at 18. I think 18.10. Bado ina run a negative. No, this one hits stop loss. This one hits stop loss. So I have the one at 17. What was it? 1760 something. I think 69 or something. Engine 17 70 something. Yeah. So for gold, I have a long-term analysis on gold. So he start kuongelea sana. I have a very, very long-term analysis on it. Wait, umesikia nimechoka. Any question? Any question? Today I only had one order which I've just opened. That is the Euro Japan yen. So if you have question, you can ask. I think kama nimeishiwa na idea.
Do you trade indices?
Yeah, but not the synthetic one. I don't do synthetic. I only do the normal indices, like Nasdaq.
Okay.
Nasdaq, Dow Jones, Singapore, hizo zote. Yeah. Oh, kuna mtu ameniuliza swali. Okay, maliza ndo nijibu yake.
So ufanyange hizi volatility na nini?
No, I don't do volatility. I don't completely. I
wanted to look at the same analysis now because that one haina London Open and Asian na nini.
Yes, actually those are the main reason I don't do it. I don't do them because first of all, they are not. I mean, I discourage to what was is funny because they have no basis ya kuzicontrol. Hakuna any fundamental analysis on them. These are computer generated numbers. So
Yeah.
you are fighting with a computer. So I think personally, being a computer person, I know I cannot fight with computers. That's it. Yeah. Okay, let me answer this question.
EJ.
TP.
Oh,
you as a set kulingana na wewe. Me, I normally put risk reward ya 1:1, stop loss 100 pips, take profit 100 pips. For intraday, that's enough. So there is 2 questions. You mentioned a software that the market makers used to look at the positioning, sometimes like Blue. Could you shed some light? Oh, they can use Blue Bank software to check the positions. That is what is happening, but it's a very expensive. You never get it free. It's very expensive. Per year unaweza kuta around per month is 150,000. So it's not something for retailers. Yeah, but if you know somebody mwenye anaweza kupea login, ujue venye utamlipa, it's okay. Kenya, I know like 3 banks using it. Yeah, these are for our trade shares. So it's a very expensive one, almost 150,000 per month. So as a retail trader, you don't need it completely. We don't need it unless unafanya commercial trading. So I asked you a question yesterday regarding sentimental analysis. How do you explain retailers being extreme net long, yet the market buys instead of selling? Okay, your question I've just answered. Probably you came late. I've just answered, and I said that retailers usually control the noises in market almost 80%. Because when you go to online charts, you find 80% or so ni retailers tu wanaongea. Wanasema, oh, buy this, oh, short this, oh, short this. There are some people who are just sitting down somewhere, wanafuata very heavy groups, wajue how people are need. Secondly, you can go to these big brokers. Like one broker najua unaweza pata good volume analysis, ni volume analysis anaitwa IG Market. I think anaitwa IG Markets. IG Market is an institutional broker, very big broker, being used by hata minimum capital. I think minimum capital yake ni $10,000. So you can open sijui kama demo anapeananga. Okay, I have a live account with them. I was lucky the time walikuwa na charge kidogo nilifunguanga account. So I don't know whether demo anaonyeshananga real volume. I don't know because I don't use demo. I don't know kama demo they show real volume in the market. But these are the brokers whereby you see most institutional traders are there. So unakuta ukiangalia volume, to know volume it's easy. You know, if you want to know volume, it's easy in your MT4. For phone, though, the easiest. So if you want to know the volume, you come. Okay, sorry. You just input the indicator. What am I saying? There is an indicator for volume. It's insert indicator. The indicator for volumes, I think ndo easy. On balance, volume, accumulation, distribution. I think accumulation, distribution. Probably accumulation. I'm forgetting the unaweza tumia AD is good for AD is good for volume. When you look at the extreme left, unaona imeandikwa AD 86 whatever 87 hivyo. Yeah, this is the accumulation of volume, but there is the correct one. Ukitumia bar, ukitumia hii bar, hata ukichukua bar, wachana hata na AD. Nikichukua bar niekelee candle chini juu yake hapo hivyo venye nimekelea. Ukiangalia pale chini kabisa kwa hii ni imeandikwa default. What I mean hapa chini ni hapa chini hapa. Let me just show. Angalia hapa imeandikwa default. You see hapa imeandikwa default hapo. Angalia hapo kwenda hivi chini. What will happen nikiekelea kastika hapo juu, candle juu ya nikiekelea candle juu ya bar, nikiekelea kasa juu ya bar. You see there is something has come. It will show you open, high, low, C, then volume. You see the V. The volume keeps on increasing. So right now, the volume of gold, it has 1109 as per the this IC market. As per the IC market. When you come to the previous one, the highest volume was 23.34. So this volume, these are what time frame? In time frame gani? These are 15 minutes time frame. So at this 15 time frame, ilikuwa for 23.34. At the next one, it is increasing. So if you see the next candle, volume has increased kuliko ile ingine, and the bar is going up, the candlestick is going up, the volume is picking up. So that can tell you, now let's keep on buying, because we buy where there is volume. And retailers don't have money to control the volume. The volume is controlled by the big cats, the big guys, you know. So when you get a good broker mwenye atakupea good analysis with the volumes, unaweza get the real representation of the volume. So I think that's clear. Yeah. So any other question? Wow, gold is going up, as we said. So kuna question ingine ama we call it a day? We meet tomorrow probably if I'll not be busy. Any other question? Okay, I think there is no question. I'm happy. At least today we had a good representation. Let me check Facebook. I mean, on YouTube, I don't have a question. Yeah, that's cool. So thank you. That is Jay for your sacrifice. God bless you. Asante nashukuru. I only do these things when I have time. Herbert Koech, take a gold trade. Oh, by the way, no, I have a gold trade on another account, not this one. I have so many accounts, I split orders. So gold in Coco account ingine. Oh, yes. Thank you very much. But it's there. We are in for it. And then EJ bado ina retest pale ndo teremke. So EJ it will test up kidogo ndo iteremke. Let me try 15 minutes nione. Yeah, we are there. Exactly. It's just about there. It's just about the point I wanted to drop from. Yeah, it's just about there. So it's good you can pull earlier. Anyway, guys, I think nimechoka sana leo juu sijakula lunch bado. So have a good day all, and see you next time if there is no question. Okay. Clear. And Asante, karibu, Duncan. Are we in tomorrow? I don't know. Come on, I'll be in tomorrow. It depends if I'll be busy. That's this. Sometimes I normally control the orders that I open today. So I'll see. I'll see if I get free time tomorrow. Okay. Bye.
Thanks a lot for the session.
Oh yeah. By the way, everyone can unmute themselves. Yeah. By the way, I forgot. Yeah, karibu. Nimeshukuru. Okay, you can exit at your own time. Gabriel, leo ulikuwa huja miss. Gabriel, kwani umeenda? Cousin. Ndakupigia shortly.
Thank you for the good lesson. You have learned a lot.
Oh, welcome. Yes? Somebody speaking.
Hello.
Yes.
Hello.
Yes, hello, I can hear you.
You can hear me?
Yes.
I just want to thank you and appreciate you very much. At least
Yes.
I've learned something that I've been looking for a long time.
Thank you very much. I appreciate your time.
Thank you.
My hope ni watu learn mazei market. There is a lot of opportunities. So yeah, you learn in the easiest way. There is no stress of so many jargon. It's just the easiest way.